teach me, if you wouldn't mind, what's the difference between Bitcoin and Ethereum?
Bitcoin and Ethereum dominate the digital currency universe.
Bitcoin, Ethereum,
Bitcoin.
Ethereum has carved out a sizable share of the crypto market,
making up over half the crypto market cap. No other coins even come close.
What are your thoughts on Ethereum?
Where does Bitcoin go from here?
They're both volatile and risky investments,
Bitcoin getting hammered today.
Why would somebody ditch Ethereum?
but can be a valuable part of a diverse portfolio.
Ethereum is going to rocket higher. Why is that?
We have a lot more to go with Bitcoin.
If you're thinking of getting into crypto, Bitcoin and Ethereum are both good places to start. But you might be wondering, which one should you invest in? Stick around to find out. Bitcoin and Ethereum appear similar at first glance, but they have different purposes and capabilities. You can watch our breakdown videos for both Bitcoin and Ethereum to get more technical details on how they work. But in this video, we'll focus on the investment potential for both cryptocurrencies, laying out the pros and cons that you should consider before investing. Let's get started with the case for Bitcoin. Bitcoin was the first cryptocurrency launched in 2009.
Everybody's talking about them. Is it a currency? Stupid.
As a decentralized alternative to traditional government-backed money, and it's come a long way since then. In fact, Bitcoin's value grew 9 million% during the 2010s, reaching a peak of $68,000 in late 2021. The price has plummeted since then, but long-term investors have held on through big bear markets before. Why? One big reason is that Bitcoin is seen as a long-term store of value. Bitcoin is often called digital gold. That's because, like the precious metal, Bitcoin has a limited diminishing supply, making it deflationary. This means its value should continue to rise over time, owing to its scarcity. You might be wondering, how can something digital be scarce?
The largest underwater mine in the world.
Well, like gold, Bitcoin is mined using computers, not pickaxes, and its supply is finite, capped at 21 million coins, over 90% of which are already in circulation. The number of Bitcoins awarded to miners is also halved every 4 years, so they become more scarce over time, raising their value. Despite massive fluctuations over the short term, Bitcoin's price has trended upward over time, proving hugely lucrative for long-term investors. So, will Bitcoin's price resume that upward trajectory? That's the million-dollar question, literally. It's anybody's guess, but its price history might give us a clue. Bitcoin's price seems to follow 4-year cycles that begin every time the reward is halved. These lines show the 3 times the mining reward has been halved, most recently in May of 2020. The first halving in 2012 was followed by a bull market, the price swings up, a bear market, the price bottoms out, and an equilibrium, the price finds balance. The cycle repeated after the second halving in 2016, and both times the price has ended up higher than before the cycle started. It's too soon to say whether this trend will continue, and there is speculation that the 4-year cycle is dead. But since the most recent halving in May of 2020, the price has seemed to follow the pattern, a bull market followed by the bear market we're in now. Whether the price will stabilize and take off again like previous cycles, we'll have to wait and see. But there's another reason you might want to buy Bitcoin, and that's growing adoption. Bitcoin is backed by a growing base of institutional investors, and in just the past year, it's been adopted as the legal tender in 2 countries, with others considering following suit. More and more retailers are accepting Bitcoin as a payment method, and in some places, you can even add Bitcoin to your pension fund. Many governments are also beginning to regulate cryptocurrencies. While not universally welcomed, regulations could provide the stability and approval that a lot of potential investors have been waiting for. This growing adoption shows confidence in Bitcoin's potential as a medium of exchange, and there's still room to grow. A recent innovation called the Lightning Network is making Bitcoin transactions even faster and more scalable. Bullish backers like ARK Invest point to Bitcoin's growing adoption and versatility when they say a single coin could go for more than $1 million in the next decade. Time will tell. But what does all this mean for you as an investor? The more Bitcoin is adopted, the more potential value it gains. So you might want to buy into Bitcoin if you believe in its potential to revolutionize financial transactions around the world. As an investor, you should also know about the risk factors of buying Bitcoin. For one thing, like all cryptocurrencies, it's a highly volatile asset and a risky investment. Its volatility also makes it less appealing as a short-term store of value. Bitcoin has long been seen as a hedge against inflation and stock market fluctuations, but its record on these fronts is mixed. So Bitcoin has not yet proven itself as a surefire way of mitigating investment risk. Another consideration is Bitcoin's energy consumption coming from all those computers running non-stop to mine coins through a system called proof of work. This is why Tesla dropped Bitcoin as a form of payment in spring of 2021, causing its price to fall 15%. There's more to this than meets the eye. Bitcoin's energy usage is a complex topic, and you can watch our film about this to find out more. Suffice to say, these factors could slow Bitcoin's adoption in the future, potentially putting a ceiling on that upward trajectory. So, what's the bottom line on Bitcoin? If you're looking for a long-term store of value, or you just believe that Bitcoin can shake up the world of finance, it might be the right choice for you. But now, let's turn to Bitcoin's biggest challenger, Ethereum. If Bitcoin is like digital gold, then Ethereum is more like digital Lego that can be used to build a bunch of other cool technologies. So, Ethereum isn't competing with Bitcoin, it's actually doing something totally different. Ethereum's blockchain is more versatile and sophisticated than Bitcoin's, capable of holding more information than just a list of transactions. It can even host fully functional computer programs called smart contracts. And that's the first reason you might want to invest. Smart contracts are one of Ethereum's defining features that sets it apart from Bitcoin. You can watch our full explainer about Ethereum for all the details. Now, all sorts of cool technologies can be built using these smart contracts. You might have heard of some of them: NFTs, DeFi, decentralized apps, DAOs, and that's just the start. The rapid growth of these technologies was behind the massive rally for Ethereum in 2021. And if they continue to grow into the future, it'll be boon for this blockchain's value. And another pro for Ethereum, it just keeps getting better. Developers have been rolling out a series of upgrades called Ethereum 2.0 that are bringing major changes to the blockchain, meant to make it more secure, scalable, and sustainable. Perhaps the biggest change is the merge, planned for later this year. That's when Ethereum switches from proof of work to proof of stake. A major overhaul to how the blockchain is maintained that will drastically reduce Ethereum's energy consumption, among other things. 2.0 could also impact price. Ethereum doesn't have a limited supply like Bitcoin does, but Ether is frequently burned for various reasons, reducing supply. After the merge, that burn rate will go up, potentially making Ethereum deflationary like Bitcoin. There's a lot more to this. Go watch our film about ETH 2.0 for all the details. Now, let's look at some of the potential challenges to Ethereum's growth that you should know about. For one thing, there's competition from so-called Ethereum killers, altcoins like Cardano and Solana, which share in its capabilities for smart contracts, but also boast some improvements. Ethereum can process transactions faster than Bitcoin, but that comes at a price. Transaction fees, known as gas fees, and these have been notoriously high. ETH 2.0 promises a fix for this called sharding, which should bring fees down, but whether it delivers, we'll have to wait and see. Ethereum has also faced some technical difficulties, including a bumpy and delayed rollout of its 2.0 upgrade and a major hack in 2016. If the upcoming merge is fumbled, that could hurt Ether's value. So, what does all this mean for your investment decision? Investing in Ethereum is like investing in Apple or Tesla because you believe in the underlying technology. Ethereum smart contracts are at the heart of so many emerging next-gen technologies that promise to be a big deal. And if you believe in the future of these technologies, then you might want to invest in Ethereum. Those are the reasons why you might want to buy Bitcoin or Ethereum, but how do they compare when you look at the numbers? Let's take a deeper dive to find out. Let's start with ROI. For investors who got in early, both Bitcoin and Ethereum have been wildly lucrative. Bitcoin was the best performing asset of the 2010s with an annualized ROI of 230%, beating out the Nasdaq by 10 times. Ethereum's returns have been no less impressive with an annualized ROI of nearly 300%. In 2021, Ethereum actually edged out Bitcoin in total realized gains, thanks to the popularity of emerging technologies like decentralized finance. Bear markets have caused big losses for newcomers, but even in the trough, Bitcoin's price has maintained a long-term upward trend. No asset goes up in a straight line, and in the short run, both coins are highly volatile. Lots of people do lose money speculating on crypto, especially frequent traders compared to long-term investors. While Bitcoin isn't stable, it's among the least volatile cryptocurrencies out there. And like most coins, Ethereum tends to follow Bitcoin's price, except that it's generally much more volatile. So when Bitcoin goes up, Ethereum tends to go up more, and vice versa. Okay, now for the bottom line. Which coin is right for you? It really depends on your investment style. If you prefer a store of value or you want to buy into an innovative, decentralized payment system, Bitcoin might be right for you. However, if instead you're excited by technologies like NFTs, DeFi, dApps, and the metaverse, you might want to go for Ethereum. But it's not a zero-sum game. Bitcoin and Ethereum aren't really in competition, and you don't need to choose just one. Generally, when one coin does well, so does the other, and many investors buy a mix of both. Whichever coin you choose, remember, they're volatile and risky investments, but they're both great coins to start building your cryptocurrency portfolio. Thanks for watching. You might want to check out our film about crypto analysis next to learn how to build a value-based crypto portfolio. And make sure you hit like and subscribe to stay tuned for more films like this one.